Okay, traders, what's going on? Jamie Saettele here. It is the midweek strategy webinar on August 3rd, 2016. Matthew saying that he can see the charts, waiting to confirm audio. So let me know, Matthew and everyone else, that you can hear me. Okay, great. Loud and clear for both. Super. All right, so let's get started. Sorry for the late start. We're getting started, I guess, 12, 13 minutes late here. Had technical issues, and it seems to be quite a common theme sometimes. But um, either way, we'll get into the charts here. Okay, so we've got Euro. I want to start with, and this is I think, a good good lesson, or time to review a lesson, if you will. So last night we wrote about Euro and the fact that, I've written a lot in recent weeks and months um, about the Euro, well, the dollar in general, but the Euro specifically, right, with some of the longer term special reports. And, I'm of the mind that the Euro is really headed higher. Okay, I mean, I've gotten challenged a lot on that in these webinars and elsewhere, but that the ultimate consolidation, the ultimate break from consolidation is going to be higher. And what I mean is the consolidation from the range that's been underway since March of 2015. So, when you see a bullish week like you had last week, okay, and you have this long-term bias, if you will, a longer-term idea that the euro's about to really, rip to the top side. Um, you kind of like, you don't want to miss the move, right? And so you see it and you're like, well, maybe I should just buy this thing with a big ass stop. Again, you don't want to give in to your emotions, and buying at resistance is what you'd be doing, is giving into your emotions if you acted that way. So the daily chart here that we've been following, this is really the one. So again, what I think is the active slope appears to be the active slope, and we did kind of show it here after, the Fed. Once we had kind of really come off this, the active slope is simply, a pitchfork from July 20th of 2015, October 15th, 2015, and then of course the ECB low on December 3rd. And you've got some really solid slopes here, and we actually trade into resistance, as we talked about in yesterday's piece. And we've come into minor support. You could see bigger support down near 111.10, or even 111. So that might be really the big area to get long euro. Okay, is 111, 111.10. If I go to the short-term charts here, here's the short-term chart, hourly chart. You can see here we have come into what I would classify as support, but again, don't know if it's more of an interim support. In other words, not sure if we're really going to hold it, on the way up, right? So this is a level that, if you wanted to scalp it off the long side, maybe have a long for half a day or whatever, you certainly could. There's a possible wave count here that actually says this would be 1, 2, 1, 2, 3, 4, 5. This is wave 4, okay, which you could go sideways in for a little bit and then get a thrust higher, maybe up into the 1260s, 1270s over the next few days, and then get the bigger correction lower before you go higher. Bottom line, keeping it simple from my standpoint, trading wise, is I want to be a buyer on weakness in euro at support. This is support in euro, but again, it's probably not the support, right? The support, the one that you really want to buy on a swing basis, is probably down closer to 111.10 or so. All right. So that's the thinking with the euro, and you'll kind of see that with the dollar Swiss chart too. Okay, we talked about dollar Swiss in last night's swing update as well, right? Following this, which is just based on the trend line that extends from the November 2015 high and again the January 2016 high. So we've come into a region where, Support, not a surprise that we've seen it. We have rebounded strongly off of that support today. I do think that resistance for this is probably up in these slope regions. One's the median line, and one is a parallel that's just below the median line, which really is probably a little more important to pay attention to simply because it extends off of a certain number of highs, the high from March 16th, and then of course the low here on 7/14. So that would be slightly higher. It's really kind of in line with the euro idea, right, of having support in the euro maybe closer to 111.10. We're currently printing 1170, really right around where we opened the week. So we're not very far from that. And then dollar Swiss 97.40 to maybe 97.65 or so. A move up to there probably would be coincident or in line, I should say, with the euro sneaking up or sneaking down into 111.10 before you get the big buy. So that's my thinking with euro and Swissy. The U.S. dollar index itself, actually, here's a U.S. dollar index chart. This is an hourly chart. Here's a short-term chart. This is kind of like my trading charts, if you will. You can see 1, 2, 3, 4, 5, 6, 7. So you might have one more leg down in the dollar. Okay, so the way to draw this from an Elliott standpoint would be if this is 1, you take wave 1, connect it to wave 3, draw a parallel line, connect it off the top of 2, which would be here, and that gets you an estimation for the top of 4, which looks like it's actually just about near these lows over here, doesn't it? It certainly does. So about 11,950 or so. Got a nice little slope internal trend line there as well, right? Which would potentially give you an intersection. So 11,950 could be a spot where you actually get the next decent resistance in the dollar to trade on. So that's something that I would really pay attention to. And let's see when that comes into play. Getting a little bit of a dollar bid here. Let's see. It looks like it's during Europe tonight. So you might get down into that 1110 region in the euro this evening. As dollar gets up, into 11,950. So that's a good one. I'm kind of going on the fly here with this because I had all these tech issues. I wasn't able to make as many notes as I usually do before these webinars, but since I spend more or less every waking hour with these charts, I'm fairly familiar with them. That and playing with my 2-year-old. All right, so we've got 11,950, I think, is a big spot to watch for in the U.S. dollar index. The Dow Jones FXCM one, of course. All right, so there we've got euro and dollar and Swissy that we looked at. Let's head into the British pound. Okay, so as we all know, we've got big support in pound, and I sent out a note this morning on Twitter about exiting the long position for the time being, and that actually brings me to, I know there's probably some new people in here, some new members, so welcome first and foremost. But Mike had said that some of the members, I think, were fairly confused maybe about using the site or weren't sure. So there's 2 updates. There's intraday and there's swing, okay? Swing as in long term or longer term. You can always find the most recent post on the right, but the stuff that I publish, these are, very broad longer term charts, and they're not necessarily updated every weekend with comments, but usually the charts are, but the comments are newer and bold. So you can scroll through that just for very general viewing on longer term trends and whatnot. But then the daily swing updates, these are the updates that are written every day. They're usually published around the end of the US towards the beginning of the Asian session. And the latest update is always going to have the current trades and then the pending trades, if there are any. If there's pending trades, that means that's when an order is in. Okay, so that means I have an actual order to buy at that level. Okay, so in this case, there was pending trade. You can see here, there was a euro long and Aussie Kiwi long. That means it's an order that's actually in direction daily. That doesn't make any sense. That should say long. But then the next day, I guess we had 8-1. You can see there was pending trade, Aussie Kiwi long, 104.90, et cetera, where the stop and target and all that stuff is. Okay, so that should, kind of spell out exactly how to use the swing trades. So sometimes I'll actually get out of a trade intraday, and when I do that, or get into a trade intraday, and when I do that, I'll send it via Twitter, which is the SB Squawk Twitter. It's the private Twitter that you have to have. We have to confirm you to follow it. Not anybody can just follow that. So anyway, so we got out of that trade, the pound trade, because we had come up into a resistance level. Okay, the resistance level in question was the high volume level from back here, which was on 714. Okay, that was literally to the tick resistance. Actually, 33.71 was the high on the bid, and the high on this was 33.72 on the bid. Looked like the ask was 33.72.9. Anyway, that's where we got out. Oh, that's where we got resistance. I got out the end of the 4-hour close at 9 a.m. New York time, as I sent that out around 33.40 or so. And what we're looking for now, we've got BOJ, right? So we'll be looking for support from one of two levels. Okay, either 132.35.66 or closer. Or I should say closer to 132.35 or closer to 132.66. Okay, 132.66 is simply going to be the high volume level from last week. Okay, and you can see that I get these levels from futures charts. So here was the high volume level here that we found resistance at. The high volume level from last week is right here. It's essentially these former range highs too. Okay, so I would be, kind of paying attention to as we come in overnight, BOE. I'm sure there will be rumors, this and that seems to be the thing these days, right? Remember the BOJ debacle last week? There were all kinds of rumors, and yen was going all over the place before there was any sort of announcement. You could have something similar with BOJ. I don't know. I do know that BOJ is, priced in like 100% as far as them cutting and doing a whole bunch of other stuff. So to me, the risk is higher, because if they don't do all of it, it's going to go higher. And even if they do all of it, everyone already knows they're going to do all of it. So it's like, where's the surprise? Markets don't move on them doing what everyone knows is going to happen. Markets move on surprises. And so the risk is for the surprise to be on the top side, in my opinion. Doesn't mean you can't get a quick flush down. But just like the RBA, right? RBA, same thing. The risk was that it would be to the upside, because it was a 60% priced in as far as them cutting rates. Okay? Well, okay, great. They cut rates. You get a spike down right into support, and you go higher. Okay? And, if they didn't cut rates, you would have gone straight higher. I'm glad they did, because we were able to get our trigger on the Aussie Kiwi trade on that. But that was kind of an opportunistic, entry, which we were able to take advantage of. Anyway, for pound, 32.66 and then 32.35 are the areas I would watch for support, on the overnight and into tomorrow morning. Okay. As we get into, kind of the longer term pound charts, like where might we find really big resistance? I still think it's probably up near, on the weekly chart you can see it better. I still think it's up probably near this line, the really long-term slope line, which was support back here early in the year. I still think it's probably up near 36. You have two equal legs from the low down here at 37.42. But 36 would be the first spot that I'd really pay attention to as far as resistance is concerned. Followed by, again, the gap close at 36.49, and then, of course, 37.42. If we look at, there's an interesting cycle at play here as well, and if you go back really to the beginning of the year, okay, so you've got, here's the 121 low, January 21st, okay. I think it's a 27-day cycle. It is 27 days, okay. If you go backwards from there, you actually get the high on December 2015. You go backwards from there, you have close to a high on right here, okay, in November 2015. Go forward, January 2016. 27 days forward is the exact low on leap year, okay, 2/29/16. 27 days from there is also the exact low, okay, on 4/6/2016. 27 days from there is 1 day before a low, which was on May 13th, 2016. 27 days forward from there is really nothing. It would have been 3 days before Brexit, so it was right here, but I wouldn't really count that as anything because you're a couple days off. And 27 days forward from there is actually right here. So that would have been, to me, since you would have, that if this cycle were to hold, and that would have been an important pivot, you should have gone lower from there because that would have been a rally into a high. It did not. We've gone through that. So to me, that's actually bullish, the fact that you've gone through that cycle, okay? So there's just kind of another little reason to, maybe think, okay, pound is actually headed higher. Wave-wise, I've seen some wave counts out there with people talking about, maybe this is like 1, 2, 1, 2, and that you're in a third wave lower. I'm not really with that. To me, this is 1, okay? This is 2, this is 3, 1, 2, 3, 4, 5, and this is a monthly now. And so the next, move is high. The next move is up, in a fourth wave. Okay, so you'd be labeling this. This is a monthly chart. You'd be labeling this as basically 1, 2, 3 with this 1, 2, 3, 4, 5, 4, 5, something like that. Okay. And there's, again, a number of reasons for that. One is quite simply the emotion around it. The kind of stuff that happened here on Brexit is, to me, more typical of at least an interim market low. By interim, I mean at least, a number of months, if not longer. Plus, I mean, all the insane trend lines you have down here we've talked about for months, really since Brexit, so 6 weeks or so, we've talked about the trend lines that you have down here, on multiple fronts. And then finally, the cycle. You've got 96-month cycle, which is an 8-year cycle, okay? And it's really quite, accurate as far as the lows are concerned, going all the way back to 76, a little early on that. We're a little late on the cycle, but then goes into 85 low, exact month, goes into the 93 low, exact month, a couple months before the 2001 low. 1 month after the financial crisis low, suggests that the next low is actually due in February 2017. So that would give you an idea of higher to sideways before you go into a new low in 2017. Um, so obviously lots of room on the upside from there if we're looking at it, in that manner. You're asking about bullish head and shoulders. Yeah, it could be, I guess. I'm not. For me, I wouldn't call this a bullish head and shoulders though. You've got too much time on the too much time here. Okay, on the right shoulder. So like if this is your left shoulder, your head, this is just too much time on a right shoulder. So I would not call that a bullish head and shoulders. Okay. Let's see here. Moving on. All right, so we've gone through the kind of Europe, Swiss, pound, dollar. Dollar yen. I don't really have anything to say about it. It's kind of gone through most everything that I would be looking at as far as a trade's concerned, so I don't have much there. For me to actually want to be long dollar yen, I would have to see it, kind of erase yesterday's decline, get back above 102.80. So nothing for me to look at as far as dollar yen is concerned, and that's okay. You don't have to look at, force a view on something. There's plenty of things to trade, so don't worry about, not having a clue on something. That's perfectly fine. Euro yen is kind of interesting because it's at this level that we've kind of been waiting for a while. You can see, the long-term downtrend channel, and then you're at the uptrend support level if you're going to make an uptrend support level, and then you're at the 618 of the entire rally from the June low, Brexit low, which is 112.90. So, if Euro yen's going to make some sort of an attempt higher, kind of needs to be now. Otherwise, again, forget about it and look at something else. Kiwi. Let's go there. Actually, let's go to Aussie first, and then we'll go to Kiwi. So Aussie, as we all have been waiting patiently for, the 77, region to get tested. That's where I think you could see a top of some sort form. Okay. There's just tons of stuff up there. I mean, you got from horizontal to slope, there's a massive amount of resistance or stuff to provide resistance for Aussie dollar. Okay. Amir asking about pound yen. I will take a look for you. Let me get through this stuff first. But Aussie dollar, 77, 15, 77, 38, I think is the price. Yeah, 37, daily reversal resistance. That's kind of an area to target, in my opinion, before you get, maybe a deeper setback. Now, at the same time, if you get through that level, you're talking about this thing could really explode, okay? And then you'd actually be looking at this area as support on the retest if you got a retest. Okay. In the meantime, to me, Aussie is a buy, on dips. Okay. So if I'm looking at it, say go to a 240-minute chart, This is the slope that probably, Mike, shorter term guys would be following. And, the 75-40 region, 75-40 or so, kind of good horizontal stuff around there. Maybe you can get into that area in this lower parallel over the next few days, potentially. If you did, I think it'd be a big buy for Aussie on the upside. Again, this was, the RBA rate cut. You got that big, move lower. This was, of course, FOMC. We were actually long, got taken out, unfortunately, but so be it. Stuff happens. The 9 times, that you say, well, if I just didn't use a stop, well, yeah, okay, say that works 9 times. The one time it doesn't work, then you don't have the balls to get out on your, at yourself, and you end up getting taken for a ride, and no bueno when that happens. So Aussie would be looking for support. The big caveat, as I kind of noted last night, the big caveat with all of this, with the dollar bearish story right now, and really throughout this month of August, is that seasonal tendencies are actually quite bullish the dollar. So that, let's see, that in itself is kind of a, I guess it doesn't, again, it's not a total deterrent for me being bearish. What the hell? For me being bearish the dollar right now, but it is, kind of something in my mind that, like, it'd be better if it wasn't that way. Like, here's Euro, for example, right? Euro seasonal tendencies followed well at times this year. There have been times when it's done the exact opposite, however, like, June, for example, is typically really bullish for Euro, and we fell for most of June. So it doesn't always work. Obviously, nothing always works. Like Aussie, for example, is one that, as you can see, does tend to be and has followed its seasonal patterns extraordinarily well this year. Again, the purple or magenta line is the seasonal 15-year line, which is kind of in the middle of the longer term 20 and then the shorter term 5 and 10s. And then does tend to top out middle of July and head lower until very beginning of September, at which point you go through a very bullish period. So again, I could see us being sideways in Aussie, for example, down to 75.40, up to 77, 77.15, and then down again as we consolidate into the end of August. And then, we get September rolls around, the last 4 months of the year, the dollar just gets hosed, right? That could be something certainly that would not be a surprise. As far as combining, trend elements, seasonal elements, pattern, slope, support, resistance, blah, 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 blah. Okay, so, it's not a one-shot thing here as far as straight line is concerned. Euro just took a little bit of a dump, it looks like. Here we got Euro, as you can see. We just took out, actually, the, was that the very early week lows. Again, if we are talking about maybe a 5-wave move here, I wonder if this would hit it. Woo! There we go. Look at that. Could be it. It could be a low right there. Could have just hit it. What was that low? 48. 1, 2. 1, 2, 3, 4, 5, 3, 4. Okay. So you could end up going higher right here, right now, into this, to a new high in wave 5, before you get a pullback again. So could be Euro wave 4 low. Make a little note here. Where were we? Aussie. Okay, so that's Aussie. Kiwi looks worse to me than Aussie does, and as you can see, got the daily. So everyone knows the Kiwis traded up to and tested on the long-term line that goes all the way back to the 80s and 90s, right? This is 1985, this is 1993, and we hit that line 3 weeks ago. Came off hard, ripped last week, secondary high here. We may have made a second wave high. Here's the daily. So we've already wiped out everything. 72 looks like resistance as it's the month week open. And guess what? If we go short term here, an hourly chart, here's the channel. And I wonder, I don't even know if you can get all the way back there, can you? Probably not. Let me try something here. Be looking for a bounce here probably pretty soon. I mean, you've already taken out, come into a level at 71.47, which is actually the high here, okay, in early June. So you have come into a horizontal level. That might be the level to pay attention to right here. You see how that, okay, you see how at first glance it doesn't look like a whole lot, but then you notice that became support right here. So to me, that might be what we would call your working slope, okay? And then if you could get a move up into 72 or so tonight during Asia, maybe a little higher, that gives you a chance to maybe get on the short side. But again, if you're trading shorter term here, you may very well get an opportunity to buy into this, okay? So I'm going to follow both of these. One of them's red, different color. And yeah, you know, if we go out a little bit, you've got again the line that goes all the way back to the 80s. But then what's this? Little head and shoulders. Good way to start a top, is it not? And in this case, you know, if we trade Kiwi to the short side, you actually are trading with the seasonal patterns. Okay, here's the seasonal pattern for Kiwi. As you can see, it's really exceptionally bearish again through this month, and the frequency, you know, is very bearish. In other words, there's a large percentage. It's not just bigger moves. It's a higher percentage. That's what the really long red bars indicate. And this is all the way back to 30, 20, 15, 10, and 5. So basically, Kiwi's been bearish in the month of August, like for 30 years. Okay, so there's get that going for you, which is nice. All right, so yeah, you've got looks like support again, probably around here, more or less where we are, with resistance really up around 72. Okay, what about Aussie Kiwi? Why don't we look at that next after dollar CAD? So dollar CAD, you know, kind of tricky. If we were gonna fail on the upside, I would have preferred it been a little closer to at 133, right? This is the weekly chart. Okay, this is your long-term slope that's worked pretty well, and it was support here, resistance. Okay, I'll look at gold AMD here in a little bit. Um, so we had this little key reversal last week, and here's the daily chart. You did pop to a new high last week, or sorry, today. Again, we were looking for 31.55, 65 or so to provide resistance. Thing is, CAD is showing a relative strength. Dollar CAD is showing a relative weakness to crude oil. Okay, here's your crude chart. And as you can see, crude's gotten smoked on. Dollar CAD has not really budged all that much. You'd have typically, in a normal, or if they were really highly correlated at the moment, you'd expect to see dollar CAD a lot higher than where it is because crude's fallen from $52 to $39. That hasn't happened. Okay, so what we're looking at here really is, dollar CAD, not necessarily following or having the beta of crude oil at this point. So here's your 60-minute crude chart. And even crude ripping higher today, you haven't seen a whole lot of dollar CAD, volatility either. So dollar CAD's been somewhat stationary, despite crude's bigger moves. So not really getting a whole lot on this. But if this is some sort of a low, I'd be looking for a low close to 37.75, 38.84. Again, 37.59 is the Doha low. You remember that from April. 38.84 is the 50% retracement of the move up from $26 to 51 and change. So that's a good spot for a low, which means you will probably want to be a dollar CAD seller, if the market can stabilize, in this region. Thing is, we're getting up now to resistance pretty close, to the median line here, 41 and change, up to 42. Okay, 42 specifically because that was, again, I think that was the March high from this year and the March low from 2015. So we may still get a move up into 31.55.85 before all is said and done for dollar CAD. Okay, but I do think that you probably would want to be, given this potential false break here, dollar CAD could be setting up for something on the downside. Okay, so you can envision kind of maybe a wedge, right? Boom, 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 boom. Really, I want to sell on the median line is what I want to do. Okay, the median line here has been pretty solid as far as giving reactions at times. We're a bit below it as far as the recent highs are concerned. So not really looking to press the issue. You've also, again, got or I should say not looking to press the issue at this level. I mean, you could put a short here. You'd have to have a really wide stop, though, because a move up here, all you're doing is leaving yourself at resistance. That's why it's important to trade at specific levels, and rather than just, say, here we go, I'm bearish, I'm going short, or here we go, I'm bullish, I'm going long, right? If you do that, you get shaken out of positions on moves that don't really matter. So, yeah, want to short up here. Okay, now let's look at Aussie Kiwi. Aussie Kiwi, we were able to get in on this at 104.90, survived a spike, if you will, and certainly reacting in a manner that's consistent with, a low. I mean, here's something that you should know as well. Do you know that you actually had a monthly key reversal? This is a monthly key reversal. Okay. We also had a monthly key reversal down here. One low, second low. You know what that means? Three-wave decline. That means we're talking about a third wave higher or a C wave higher. Minimum target probably being up here around 116, 117. We're talking about 1,000 pips from here. Okay. And with this being a third or C wave, it could be in a hurry. Here's the daily chart. So daily chart, you probably have your first resistance to really worry about on the long side right here. About the year open, 106.60, okay? As far as bullish slope is concerned on the short term, we don't really have much to work with at this point other than what I put here, which is, well, that wouldn't even count. It's a weekly chart. Probably go here now. So this could end up being something, but it's way too early. You really have no freaking idea. This could be something, but again, it's too early. You don't know. I would go with the shift first, which is the trend line one. So actually, you do get that there. Okay, so you could end up with, some resistance. You do see cross here on the 50 line. Okay, you do have a high here. So these could be the levels to follow moving forward. You just don't know yet. You kind of got to observe and watch it. So you could get a move up here into 106.50, 60. Maybe you'll find support around 105.50, 60 because you do have some levels there on the daily chart, right? High on 8.1, low on 7.27, even close to a high on 7.7, right? So this could be what we want to watch moving forward. We just don't know yet. It's too early, okay? So, could be something that, again, gives us opportunity to add to this trade or trade around this trade or whatever you want to call it. Okay, but I do like, generally speaking, I think that Aussie Kiwi on the long side could be a really big one, right? I mean, just look at this scrolling out to 2014 price action. Got a big low, another couple lows, right? Does look like quite the head and shoulders, if you will, that's unfolding here. So that potential is certainly there, but at minimum on the near term, looking at the rally from the low that we are, from right here, we're talking about 108.90 and then 111.70 as far as the fibs are concerned. So yeah, it's a good position to just sit with for the near term. Okay. All right, so there we have some Aussie Kiwi. There were some questions. Pound yen was one of them, and gold was one of them. Let's take a look at gold and pound yen. All right, hold on here. Mir asking, how do you use it? Well, and do you take it from futures.com? Well, this is my platform, and it's TradeStation. I have the volume for the futures levels. Yeah, you can use it as support and resistance. I like to use it as support and resistance or as simply just a kind of a bias level, right? So it's like if it's above the volume level, it's bullish. If it's below the volume level, it's bearish, right? Very general, very easy, very simple stuff. But as far as where to get it, yeah, I mean, I don't know. If you have a futures broker, you can just get it from your futures broker. That's what this is. Pound yen, let's take a look. I really don't care to trade any yen crosses at the moment. I just don't. I think there's better ways to look at. Okay, so here's pound yen. I know, Amir, we looked at this last week. Here's your weekly chart. Obviously, it hasn't changed. It's a weekly chart. You are at the 618 now, actually, of this move higher. So that's, interesting. So what? 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. So you might get a rally and another decline in here. Not sure that this is necessarily going to hold for you. Yeah, so I wouldn't try to buy this here. Probably wouldn't really try to sell it here either, though. Let's see if there's a channel here from this. Yeah, nothing that's exceptionally clean, really, from my vantage point. Um, I like the long-term weekly, as I've said, support. You do get the 5 waves up, which is clean as can be. So you're looking for a low, but there's nothing to really trade it from here at my point, from my vantage point, Amir. Sometimes there just isn't a trade that works with your style. And for me, there's nothing for me to do here. Okay. Um, on pound yen. You could watch this, see this here, see this original slope that goes down. You see this line that goes off this level, off this resistance. Watch that level. Okay. It looks like it's at about tomorrow it's at about 130, 133.20 or so. Okay, Amir. So looks like it's at about 133.20. So yeah, 133.17 would be kind of your area, I think. Then let's look at gold, and then Kareem actually has a question on forks in general, which I love those questions. And so let me cover that after I follow or after I look at gold here. So gold, we have a question on gold. Here, by the way, is a nice. Anyone buy any Bitcoin today? Do you see I pushed that chart out last night after it crashed right into support? So that might be your chance to buy Bitcoin. It's how Bitcoin trades. It goes higher, it crashes, and it'll start to go higher slowly until a parabola crashes, go higher into a parabola and crashes, and repeats itself all over again. So here's gold. You're above the long-term trend line for the most part, or sorry, that's a log basis. So you're above the long-term trend line here on an intra-week basis, okay? 2011, 2012 line, right? 2011, 2012 line. However, we're now making, kind of turning down. It's not by no means breaking out or anything. So for me, I would be quite worried that you could actually get a deeper correction, and I'm expecting a deeper correction actually back into 1280, 1275, 1280 for gold. Okay, that's what I'm looking for. Don't know if it's going to happen, but that's what I'm looking for. So you're asking, the question here was gold retested 1335. Should we look for a move higher? Yeah, so it could retest timing. You could, but again, this is to me not really a long setup. I'd be looking, your support would probably be down here, closer to 1330, which is this trend line. Although if you get down here, I'd expect it to break. And Amir's question, if it goes back to 33.20, then obviously dollar yen has to break 100 and pound dollar has to retest support. I mean, okay, but this is you're going to be in dangerous territory if you start thinking like that, because you don't know what's going to happen, right? For all you know, pound yen's going to go through the roof. I'm saying that if it gets down to 133.20, it's an area that I'd consider as support. This is also an area to consider support, right? That doesn't mean I'm buying it, right? It just means it's a level to consider for support. That's all. That's it. You don't know what's going to happen. No one knows what's going to happen, right? For all we know, dollar yen's going to crash or dollar yen's going to rip higher. I mean, I don't know. I don't really know anything about the yen right now. I have no clue what the yen's doing. But yeah, I'd be looking for support based on a number of things, including 5 waves up and then a choppy drop. Okay. Whether that's here or 33.20, I don't really care. They're pretty close together, actually. Right. So Okay, and there's a question we had from Kareem asking, Jamie, can you do a quick explanation on how and when you draw forks? Thanks. So, okay, so it's not necessarily the forks that really are, I'm going to give you a euro dollar example. We'll talk about it. I don't use pitchforks because they're pitchforks. I use pitchforks because they help me find the slope of a market. Okay. So let's go to the euro dollar daily chart. Here's a daily chart coming off now at 11:45. Okay. So if I take this market and I look, well, obviously the market's going sideways since March of 2015. Okay, I can look at various trend lines like this. Okay, that's interesting. Does that go, what does that do here? It doesn't really touch a whole lot of stuff, right? It's here, and then it kind of cuts through some stuff. I'm looking for touch points, right? That's interesting. So that could be a level that I would watch for resistance now. These are just trend lines, right? But what also sticks out to me? So there's a slope that crosses this way. Okay, maybe here. So I draw this trend line here, and I'm like, where does that work? Okay, you can copy it. That's interesting. That's interesting because of these two. So then I say, well, I'll draw a fork and see if I can replicate that. And then you end up with something like this, right? And then you realize that, well, if I were to take that and actually connect it off of here, right, then that could be a level that would end up as support again. So you're looking for a market slope, right? The way the market's trading off of certain, price levels. So in this case, you get, these touches here and here. There's really no specific like set of rules as far as I can come up with or tell you that's going to say, well, this is when you draw this and this is when you draw that and blah 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 blah. It's not like that. It's not like a moving average where a price is above here or below here. Okay. But the more touches, the better. So like the median line touching here is good. Yeah, it's really just a trend line technique, right? It's not the fork that's like the thing. It's just the forks are helpful in identifying the various slope levels to see if you have other market inflection points that cross through those paths, right? It's not really about, the actual fork. It's about the trend line, okay? So, another example, I think a useful one, pound dollar. I mean, this is one of the best examples I can find probably right now. So like pound, markets move with parallels, right? Like this market looks terrible, but look, even terrible markets are going to bounce. And so you draw this and you just make a channel, right? And it's literally to the tick. That's all it is. That has nothing to do with a pitchfork. This is just a channel, okay? And then you can, you've got old channels that go across here. It's a monthly chart, right? I mean, this was off of here, ended up being support, went through it on Brexit, right? I mean, it would not be out of the ordinary for pound to trade between here and here for a fairly extended period of time, right? So it's simply a trend line method, okay? Again, and the logic behind using pitchforks or trend lines for that matter, everyone, when you tell somebody that a market is trading in a range, okay, they pretty much get it, right? Like you tell someone that, a market's trading in a range, like it's like you have support and you have resistance, and a market's trading in this range, right? They get it. Okay, well, once a market breaks out of a range, pulls back a lot of times, not always, but a lot of times, and you get support in that range, then it goes higher. What happens after that? Well, the market's still trading in a range. It's just trading in a range that's sloping up, right? That's kind of terrible artwork, but you know what I'm saying? Like you trade in a range, but you still find resistance within the range, right? So that's what the idea is that, the market's trading in a range, but markets are kind of always in a range. It's just sometimes they're in ranges that slope higher, which is an uptrend, or sometimes they're in ranges that slope lower, which is a downtrend, right? A lot of times they're a combination of both, which the euro is right now, right? Because, we've got, for example, going back to our euro, I'm tend to hold kind of, as you know, more of a bullish view on euro right now, given the long-term analysis that I've done, right? But look, there's also this to consider, right? And it's not just these two trend lines. This is also the same slope as this fork. It's the exact same slope, right? And so we had, a number of rebounds. We don't even really need this. We can just use this. We had a number of rebounds off of this, right? And so the best kind of type of, the best, I guess you'd say, setup is when you get kind of a combination of an uptrend and a downtrend that intersect, right? Those are the best ones because those are the ones when you have influence from both sides, right? From the uptrend, if you're in a new uptrend, which is again just a range that slopes higher, which you can see right here, right? We're in a range, we've been in a range, okay? But this range has higher highs and higher lows in it. So we're trading that way. Now, I don't know if we trade all the way back down here. I hope not. I would think that we'd probably try to hold up before then. And on the daily chart, not looking at a short-term chart because I do have other slope for that, but looking at a short-term chart, I'm thinking it's this one, right? So I'm looking for support kind of on this, which again is about, 111.05, 111.10. Right? When you go to a short-term chart, you can start to see all kinds of different stuff as we have right now. We're talking about 1, 2, 3, 4, maybe 5, right? The problem with the whole Elliott thing to me, a lot of times is that you end up, you say, oh, okay, well, the market didn't, it didn't go higher in the fifth wave that I was looking for, so I can't be bullish anymore. I'm giving up. Well, really what you're doing is you're just kind of like trying to fit the market in what you want it to do rather than doing and going along with what the market's doing, right? So the market, if it's going to come into support, a level that's been support, and even you can even look throughout this whole shitty range that we had going on throughout June, end of June and most of July, you actually had a whole bunch of supports within the range on this line, which goes back, all the way back here to January. All right, you had support here, support here, support here, resistance here. Okay, so what I'd like to do is then we go into the short-term chart, and let's check out this. Okay, that's cool, and this is why I start to pay attention to something like this because you've got all the support here, right? So it would have been better for the setup if we would have gotten that dip like 2 days ago or yesterday. That's where I remember I had the order to go long euro. Initially, it was down here, whereas on Tuesday I moved it down here because I was like, if we get a sharp drop down here, we have two lines that intersect there. Therefore, I'm going to put an order there. It doesn't mean it's going to happen. It just means that if it does, I want to be ready and set to buy it, and I might be sleeping at that time, so I'm going to put an order there, right? Just because we had a confluence of those lines. Then once we got into today and it didn't happen, I was like, well, shit, now we're at resistance. I don't want to put an order to buy it because for all I know, something like this is going to happen, right? Now, hopefully this ends up being something that ends up being just a correction, where we kind of do this and this and this and this and this or something, go sideways for a little bit and just wash out, basically the latecomers that got long on the breakup here above the horizontal level. If that happens, then great, and hopefully we get an opportunity to buy it at better spots. Okay. So I hope that quick explanation kind of helps you understand. Mir says, I thought that price is contained between two parallel lines because of these algorithmic computers and HFT. Well, okay, so who programs your algorithmic computers and HFT? It's humans, right? Humans have some sort of, I guess, natural subconscious herding impulse towards channels or something, because channels have been in markets ever since people charted, rice back in, ancient Japan. I mean, channels have been found throughout history in all kinds of time series, not just traded markets, but all kinds of time series. So it's not the HFTs or algorithms that make channels. Channels are made by human activity because we've seen channels in markets well before the first computer was ever invented. Okay, let's take a look at the S&P 500. So the S&P 500, I think that the Dow is actually one of the cleanest markets right now. And when you look at the Dow, you have what I think we can go one more high. 1, 2, 3, 4, and this being 1, 2, 3, 4, and then going to one more high in 5 of 5. Okay, so that's my thought. I tweeted this chart out this morning. That's my thought on the S&P, or sorry, on the Dow Jones. And if I look at the SPX 500, the CFD, which you're asking about, here's the short-term chart. Obviously, the long-term chart's going to be the same thing for the most part, looking for another high. As you know, we've been looking for a high at 2200 for a long time. And here's the slope that we're looking at. This is a 240-minute chart. You can see we've got this February-June trend line extending off of the median line of this move, which really is when you accelerate it higher. And tight range. I wrote the free piece last week on Thursday about we should expect a bunch of false breaks. Well, here's false break 1. 1, 2, 3, 4. Look for one more drop into a low as for false break 2. Right? 5 waves down. Look for support near 2146, and then look for the market to continue higher into its final high. This to me would be a flat. Even if this is a top or a bigger top, you still get 5 waves down. You still get a rally back, probably back to 2168 or so. So that's how I'd look at this. If you look at the long-term picture for the S&P 500, you're wondering where's that come from. Go to this chart here. So This is the slope back to 2002. All right, and this is the one that's been useful for quite a time. Looking for this move up here to 2200, 2213. That would be resistance. That's what I'm looking at. And Amir saying something with bonds. What do you mean? Yeah, so okay, there's obviously a bond bubble going on in the world. If you've noticed, you've had crazy negative interest rate policy all over the world, which means bonds are extremely overvalued. So my point is the next crisis will probably be driven by this bond issue, right? There will be a crazy bond crash or something, and that probably ends up being the next crisis. Okay, that's all I'm saying. Juan asking about Euro Kiwi. Haven't looked at that in a while, but let's take a look. It's an interesting slope here. This would make sense to be bullish here because I am bearish Kiwi and bullish Euro. Pretty good spot for a long-term low, I'd say, huh? Look at that. Draw the horizontal line under there. Okay. Same areas as 2013 and 2012 lows. So good support. You probably got resistance up here. This is actually a pretty interesting one, Juan. As far as this is a 50 line on the slope. Look at the slope here, okay? Cuts through. 50 line resistance. 50 line support. Weekly chart. So I'd be bullish Euro Kiwi. That doesn't mean long, it means bullish. I'd be looking for moves up into 160, 150, which is the former range lows and the slope levels. As far as the near-term picture is concerned, you can see this choppy channel looks like it's coming to an end. And trying to break it, huh? You don't even have a parallel. Actually, you've got more of a less bearish slope on the 1, 2, 3, 4, 5 A, B, C. Looks good to me. $50 retracement. Yeah. Juan saying is breakout confirmed. No, I would not say this is a confirmed breakout. For you to confirm a breakout, you have to have a pattern to break out from, first of all. And on this chart, there's no pattern to break out from. Okay, a breakout is when you have a pattern that forms for I'd say 12 or so weeks at least, preferably longer, and then you break out through the boundary. Mark asking what triggers your bullish bias in your long position. So I guess a number of things. Excuse me. There are a number of things that, excuse me, I gotta sneeze. A number of things that I would be looking at. Let's take an example of first, let's take, allergies about to sneeze. Sorry. Let's take this Kiwi dollar, for example. Okay. So it's really a number of factors. I know that we're at long-term resistance, right? Because I look at weekly and monthly charts. So for me, I probably want to be short. Um, I've seen a behavior change on this chart to a degree that I think is probably enough to be bearish because we've broken down impulsively. I also know that weekly open prices tend to be pretty good resistance and support levels. So if the market were to get back to 71.96, which is the weekly open, it'd be a level to get, I know it's a good level to get resistance you're going to get a move off of, and I've got a good level to place a stop at. Okay, I don't know if that really triggers a bias or not. I can't tell you, there's no formula for me that triggers a bias. A lot of times it's a combination of a lot of stuff, right? Technical picture combined with objective things such as weekly opens and whatnot, monthly opens, seasonality. I will look at, like, for example, the pound dollar recently, or even the euro. Let's look at the euro. I will look a lot of times at, these are really, here, let me get rid of the lines on here so you can see this. I will look at a lot of times, just for pure risk management purposes, short-term moving averages. I have these are moving averages. They're plotted a day with a day lag because I don't like the new moving average value. I like the moving average value from yesterday because really that to me is the real average because it doesn't know what today is. It shouldn't be moving intraday. You should have the average there and know what it is, and it shouldn't move all day. So what I have here are moving averages. This is 3 days, 5 days, 10 days in gold, and 20 days in purple. 10-day and 20-day are at the exact same level right now. 3 days above the 5-day. Okay, when you go into a strong trending move, the markets will pull back and they will rarely get to even sometimes the 3-day or the 5-day average, and that's it. And that's your chance to buy the dip. Okay, or rally into a 3 or 5-day average. That's your chance to sell the rally. Okay. Generally speaking, the 20-day average is a pretty good pivot as far as a swing trade bias is concerned. So for me, I know that, like I said, 111, 111.10 is kind of an area that I would be looking at for support in euro. If euro's bullish, it's got to stay above that area, in my opinion, or that's the deepest it's going to go. For one, you're not going to get all the way down to the 20-day average if you're still in a very strong bull trend. It just doesn't happen. All right. So that's kind of the maximum I would give it, for for the euro, I should say. It's kind of that 20-day average, right? I wouldn't want to see the market get below there. Otherwise, what you think you saw is wrong. So I guess from a purely objective bias, I mean, averages can be pretty useful. But again, you have to have context. So you need to know kind of where, have an idea of where the market, could go, which way it could surprise, right? So like Aussie's a really good example recently, right? We've had a bullish bias Aussie even though the short-term picture has been very muddled with the averages, okay? The sentiment, right? Just retail telling us, asking all the time about the RBA and the cut. Well, it's like they already know that. It's already happening. So, don't worry about it. Like we're going higher in the Aussie. Being above the averages helps, I guess. What else? From a really long-term basis, it can help to look at like longer-term averages, for example, dollar yen. On this chart, You're going to laugh at this one. So the averages on this chart are actually 13 week, 52 week. So 13 weeks is in gray, 52 weeks is in black. These change on a monthly basis or a weekly basis. Okay, gold is 36 weeks, or sorry, 36 months. That's a 3-month average, and purple is 60 months, which is a 5-year average price. A 5-year average price is pretty wild, isn't it? So what we've done here is actually come into a 5-year average price on dollar yen. That's what this is. So a lot of times you will see the market respond around this 5-year average price. And we have a couple times. Okay, Brexit and now, or sorry, and then in July, and we're getting close to it again. So from a really long-term basis, your 5-year average price, obviously it doesn't mean anything if you're far away from it, but as you get closer to it, it kind of can act as a very big barrier to going through. So the fact that we're at this long-term average in dollar yen gives me pause on thinking it could go lower, and actually makes me think that it could surprise to the upside. I mean, there's a lot of stuff that I look at technically. The preferred method of analysis for me is going to be slope, price structure, right? Is it impulsive? Is it corrective? Right? That's kind of the wave part of it. But these nice little nuggets of information help me understand whether or not, you're, kind of on the right side. Like, I've been bearish Kiwi, but I'm going to be really picky about shorting it, because we've come into and broken through basically all the big averages, right? 52 week, 13 week, all that stuff, right? So I'm going to be picky about it, real picky. Like last year, wanting to short Kiwi on this move, I was fine with that because we were still below the big averages, right? You can see here, 5-year average in Kiwi. We consolidated around it and really got separation from it, and that's when things really started to hit the fan. Okay, so I got to wrap it up. It went a little long today, but it's a good webinar. I think there were some good questions out there, and I really like the questions about asking about kind of methods of analysis, how to when to draw slope and when not to, blah blah blah. When do I draw it? You guys understanding that for me, it's not just about the pitchfork per se. It's about understanding slope, right? The market's in a range, right? Is it in an uptrend range or downtrend range, right? Is there uptrend resistance, uptrend support, down, all that good stuff, right? So that's what it's about. And that's how everyone's going to learn. That's how we all learn. Okay, so feel free to keep those questions coming, throughout, the webinars as we move forward. Okay. All right, so everyone have a great rest of your week. I'll get this archived and up. Be out with the update later tonight. All right, take care.